we go again. Ever since the financial crisis in 2008, it's all the rage to view Wall Street as the bad guys, right? It's not that hard to sell this image to people that lost everything and didn't get a bailout of their own. We could debate for hours what the root cause of the crisis was, but we're 8 years past the crisis and still people believe what they want to believe. And I don't think it's fiction to say that the economy since that point has been lame. Their most recent GDP reading was 0.7% for the fourth quarter in 2015. This economy barely has a pulse right now. The Fed has thrown the kitchen sink at the economy without any result other than asset inflation. The stock market has gone way up, but nobody's really benefited from that. So here we are in 2016, spending more than we produce, and politicians are now looking for new sources of revenue. Face it, guys, politicians don't create jobs. Their only way to accomplish this is to get out of the way and let the animal spirits run and let business do what business is going to do. And the only way that a politician knows how to create revenue is by raising taxes and taking it away from someone else. So, of course, there's politicians that want to punish Wall Street or anyone who earns a living from the market by creating a new revenue source. Congress has tried many times to create a bill to tax financial transactions. These bills have never achieved bipartisan support, so they never got anywhere. But one presidential candidate wants to change that. Bernie's free college for all is paid out of a tax placed on financial transactions. So you can see here that the $75 billion per year college for all plan will be paid for by a tax on Wall Street speculation. So regardless of what Wall Street does, they're calling it speculation. Now, I don't have anything personally against Bernie, but let's take a look at this. If you follow the link on that site, first of all, there's a memo to the Robinhood Tax Coalition, which should sort of tell you where they're coming from. So let's look at these proposed tax rates. First of all, we're looking for 50 basis points on stocks, 15 on bonds, and 0.5 basis points on derivatives. Now, you have to read this carefully. The assumption on trading volume here is that the trading volume will fall by 50% once these taxes are put in place. So let's see what kind of impact that these numbers really mean. We'll start with a stock transaction. Let's buy 100 shares of Netflix, currently $95 a share, which is going to cost us about $9,500. The FTT, or financial trading tax, is 50 basis points or 0.5%, which is, for that transaction, $47.50 plus commissions, right? So how about options? Let's set up a 10 contract credit spread on the spiders, or 20 options in total. In this trade, I'm seeking to earn approximately $150 in credits, minus about usually $20 to $25 in commission at present. So the notional value of the spiders, as I write this, is about $19,300 per contract. That's what the tax is based on, is the notional value. The FTT in this case is 0.5 basis points or 0.005%, which is then 97 cents per contract, or a total in this transaction of $19.30 FTT. So my transaction costs are approximately double from today's scenario. Let's look at an S&P E-mini futures contract. I'll trade one contract of the S&P E-mini. The notional value for this is approximately $96,500 per contract. So the FTT in this case is going to be $4.83 for that single contract. I'm going to be paying that on the way in and also on the way out of that trade. So again, my transaction costs are approximately double from today's scenario, depending on your commission rate. In many cases, it's much more than double. So what does this all mean to you as an active trader? It means your transaction costs will at least double from today's scenario. I believe that their estimates are correct in that trading activity would be cut in half. This will put a huge strain on the remaining online brokers to make up this revenue shortfall. Expect consolidation. Many will not survive. I believe that this will also have a huge impact on the average retail trader. Those that continue will need to adopt higher reward to risk techniques. Regardless of instrument, you have to seek higher credits or higher profits to be able to pay for those additional taxes. Markets will also be less liquid and not as tight as today. They'll be tougher to trade. The other choice is to exercise your freedom to vote and not allow legislation like this to hit the floor with any reasonable chance to pass. There's also a chance that my numbers are wrong, but I did base them on their examples. So the bottom line for me is I did trade 20 years ago for 29 bucks a trade through Schwab, and I still made money back then. It will be much tougher to earn a living from the market if that FTT goes into law, but I will find a way to survive, as will others. But this law will have unintended consequences and will harm the little guy trying to be an entrepreneur. Please inform yourself and vote. Our country's future depends on it. Thank you.